Hi, my name is Muhammad Ifandawi bin Syara. My matrix number is 23 DLS 251011. First of all, I will talk about the introduction. Accounting is often called the language of business because it records, summarizes, and communicates financial information. So let's begin with number one. Functions of the Companies Commission of Malaysia (SSM) and Inland Revenue Board (LHDN). These two is a government agencies in Malaysia. Firstly, the Companies Commission of Malaysia (SSM). It regulates companies and the reporting requirements of the companies. It also handles monitoring and enforcement activities to ensure the compliance with business registration and corporate legislation. Secondly, Inland Revenue Board (LHDN), a government agent in the administration, assessment, collection, and enforcement of income tax, petroleum income tax, real property gains tax, estate duty, stamp duty, and other taxes agreed upon between the government and the board. So SSM is the registrar of companies and businesses, the place to register companies and shops, take care of company laws for information about companies. The Inland Revenue Board is the national tax collector. They calculate and collect taxes, ensure that people pay taxes correctly, and avoid tax fraud. In short, SSM is a register and maintain companies, and LHDN is calculate and collect taxes.
Okay, I'm going to talk about three fields in accounting. First, financial accounting. Financial accounting is mainly about recording, summarizing, and reporting financial transactions to show the financial position and performance of a business. First, double entry accounting. Every transaction is recorded with equal debit and credit entries. Requires accounting knowledge and is more time consuming. Second, accrual accounting. Records income and expenses when they are earned or incurred, regardless of when cash is received or paid. Secondly, cost accounting. Cost accounting is a branch of accounting that deals with recording, classifying, analyzing, and controlling costs related to producing goods or providing services. First, standard costing. Help management control costs and improve efficiency. Predetermined costs are set for products and services. Second, target costing. Start with a market price and desired profit margin. Product is designed to meet that cost. Last but not least, management accounting. Management accounting is a branch of accounting that provides financial and non-financial information to internal management for planning, controlling, and decision-making. First, responsibility accounting. Costs and revenues are designed to different departments of nature. They help measure performance of each responsibility center, which is cost center, profit center, investment center. Second, decision-making accounting provide information to support managerial decisions such as make or buy decision, product pricing, expansion, or shutdown.
Hi, my name is Huri Nadira binti Suraidi. My matrix number is 23 DLS 25F1062. Today I'm going to present about historical cost and prudence. First of all, do you know what is historical cost? It means that original purchase price of an asset recorded in the accounting books. This cost does not change with market fluctuations. The key is assets are recorded at their original cost, not their current market value. As for prudence, it means not overestimating income or assets and not underestimating expenses or liabilities. It ensures that financial statements are not overly optimistic. The key is recognize potential losses immediately, but only recognize gains when they are realized.
My name is Nur Sibahani binti Zahari. My matric number is 23 DLS 25F1038. Today, I will explain about the accounting concept and give the suitable example. For the first one is consistency. Consistency requires a business to keep using the same specific accounting method that the business has applied on go-forward basis. Business are not allowed to change the method unless there is some reason to do otherwise. For example, if a company uses the straight line method to depreciate for delivery rent, it must continue using the method every year. We cannot suddenly switch to the reducing balance method unless there is solid reason such as the bank loses more value in early years. The second one is matching. Matching concept requires the expenses incurred by business be charged to the income statement in the same accounting period in which the revenue related to those expenses is earned. For example, a salesperson earned a commission on sales made in December, but the commission is paid in January. Under the matching concept, the commission expenses should be recorded in December income statement because that when the related sales revenue was earned. The third one is accrual. Accrual concept requires accountant to record revenue when they are earned and not when the cash is received. And expenses need to be recorded when they are incurred and not when the expenses are paid. For example, a furniture shop sell goods in October on credit but the customer paid in November. The revenue must be recorded in October when the sales are incurred and not in November.
My name is Aina Batrisha binti Azman and my matrix number is 23 DLS 25F1089. I'm going to discuss the function of this source document. First of all, we have sales invoice. Sales invoice is the document used by seller to request payment from buyer for the debt on goods or services sold by credit. The function of sales invoice is as the record of sales to initiate payment process. Next, we have credit note, a document issued by a seller to a buyer. Its function to acknowledge buyer's debt has been reduced or eliminated. Moving on, we have debit note, a document issued by a buyer to a seller, function as to correct or adjust an existing transaction. Next, we have purchase invoice. Purchase invoice is the document received by buyer from seller for goods or services purchased. Function as a record of purchase and the record of amount owed to the supplier. Last, we have check counterfeit. Check counterfeit contain details such as name of the payee, the date and the amount of the check, serving as the receipt, a source document for bookkeeping purpose and ensuring business can track its own cash outflow. This is the table that shown the example of transaction that relate to the source document that we have discussed just now.
The General Journal is the first book of entry in accounting that records all financial transactions in chronological order with debit and credit details and also record all special transactions that are not entered in other journal based on internal memo. First is the cash book. The cash book refers to record all cash and bank receipt and payment support by receipt, checks and bank slip. Next, purchase journal is record on credit purchase of goods based on supplier's invoice. Purchase return journal refer to record all returns of goods to suppliers based on debit notes. Next, sales journal. Sales journal is record all credit sales of goods based on sales invoice. And finally is sales return journal. Sales return journal refer to record on returns of goods from customer based on credit note.